Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. So here we see the reaction on strong weekly resistance that we have discussed. So also agreement with the XLP target on the intraday charts that have been hit in daily, weekly overbought. So that was proper reaction on the market. As you can see, this drop on downside. Actually, yesterday we talked on a big and really significant bearish engulfing pattern, and today, as you can see, market has dropped even lower. So these legs looks really strong, and in general, this is the candlestick pattern that we have here. It's a validation point stands above this level, and as a rule, on the normal market conditions, so it usually leads to equal downward continuation in the way of the ABCD on the intraday charts. Something with some kind of the ABC top D pattern should be formed. At the same time, we are watching for Brent by the buy trade on the daily chart, because we have the good frosting upward action and confidence support around 1220, 1248. So market hasn't shown yet no close above the, below the 3x3 moving average. So this trading setup stands ahead. And currently, if you do not want to take the additional risk and do not want trying to go against the major tendency, you just need to wait to see when the bullish patterns will be formed. If you still are ready to trade on the patterns that we have here, especially as market is bouncing down from the overbought condition, is forming this engulfing, you could consider possible taking the short position and a continuation of this downward action. So from that standpoint, if you take a look at the fall time frame chart, you could see that gap has been closed accurately. As you can see this, as soon as market has closed the gap, it returns that back up. Now it stands at the first resistance, 1358. So theoretically, you could consider taking the position either from this level or from that level to the downside continuation in some way of the ABCD pattern. So that's how the engulfing pattern could work. But we again warn you that in the current situation, any trades against the major tendency keeps additional risk. So this is not common practice as we stand in habit with this, compared to the previous years when the market were driving by its own some fundamental, technical, economical factors. Currently, the background stands different, and in any moment, some news could be released, some representative could talk and said something or something of that sort. So from that standpoint, any attempt to go against the major tendency just increase the risk of this trade. But by themselves, overall setups are really, they look not really bad. So we see this strong engulfing pattern, and well, currently at this moment, I would not see something really, some signs that probably market is just ready to jump up again and break this top and continue upward action. So theoretically, some deeper retracement maybe will happen. But anyways, choice is up to you. So if you're ready to take a risk, you could consider the possible scalp trade based on the engulfing pattern. If not, well, in this case, we just will sit on the hands and watch for the pattern in the continuation of this tendency. I mean, the possible Brent body trade on the daily chart.